Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so, this is pre-market prep for Wednesday, April 9th. Going to take you through the normal tickers, beginning with the UVIX. But I did want to just hop over to X real quick. Got about 8 minutes left in the poll. Does seem like Unity Software will be winning, but Hood is right behind it. And actually, Hood tied with NVIDIA yesterday, so I'll try to do both of those today, but we'll come back and check this poll if you guys do put in some last-minute votes. And the link to it is in the description of the stream, the video here right now. But yeah, let's dive into the charts. And so here, looking at the UVIX, this is the 2X long VIX Futures ETF, which closed yesterday at $92.37, being up 25.69%. That number haunts me. And in the pre-market is up even more as it looks like Trump put on the 104% tariffs on China, and I think China's putting a reciprocal, maybe 84%, I forget the exact number, back on the U.S. So this is just kind of a standoff that is escalating. And so the pre-market price is right around $104 and right around $104, being up about 13% or $12 in the pre-market. And we can see here we did put in a bullish engulfing candle relative to yesterday's open, relative to Monday's open and close, fully engulfing that. And we did put in a higher high at 105.18. But if we do look over at the 10-minute time frame, we might get a little bit of a different picture. Yeah, 125 was the pre-market high on Monday. So we're not quite there yet. And it does look like we're bumping into some resistance right around 106, getting kind of a triple top there based on, or really beginning with the high from yesterday during market hours, which was 105.18. We did get a slightly higher high here. Let's see, in the after hours at a price of 105.43, and then in the pre-market hitting a high of 106.53. Excuse me if I read some of those numbers wrong. 106.43 was the number in the after hours high. But let's just look over at the daily time frame. And so I have been talking about for quite some time this trading in this downtrending channel, and having these like 2-week cycles of going up, going down, going up, going down. And the last time we got up to the end of a green box, we were above the downtrending channel, the top of it. And that was kind of a signal, in my view, that this was going to be launching. I didn't really think of it too much because I had kind of gotten into the mindset of, it's just going to be trading in this channel. I didn't think the tariff wars were going to be going off like this and that this would be escalating so much. And we are at the end of this 2-week bin here. So I am just going to adjust the high from this to be that high from yesterday of 105.18. That doesn't mean that I think that the top is in. In my view, there aren't really signs that this is going to slow down because we have such a green candle on the day. However, if we do look at the volume has been going down as price has been going up. So, I suspect we might be seeing, maybe a top put in today, and maybe some resolutions between China and the U.S., and things start to cool off, and then maybe this could be pulling back to around 54.60, which is where I have this red line. I don't know if it's going to be getting back to any of these levels to the downside, and since there is so much clutter there, I'm just going to be deleting some of those levels so it's not so much going on down there. But yeah, this I was waiting for, as I'm probably going to talk about every day, I was waiting for 28. I would have just gotten 1 share, so no big deal. But from the bottom, or from 30, this has gone up, over 250%. And so, quite remarkable there. And I wish I would have participated in it, but it is what it is. And I suspect that it might be, let's see, how long was it since we had this other, massive move. It might be another looks like 245 days, so over 6 months, 168 trading days. But yeah, I mean, pretty remarkable. But then let's now look over at the VIX. This is the Market Volatility Index. We can see up here we did move up to the 786, which is around $55. Hit a high yesterday of 57.52, and not getting above the high from Monday, which was at $60.13. So there is some divergence there with this relative to the UVIX, this having hit a higher high, whereas the VIX actually did not. And so that makes me think that is kind of a topping signal along with that diminishing volume in the UVIX. But then looking at the VIX, let's see, closed the day yesterday on Tuesday, April 8th at a price of $52.33, being up 11.39% on the day, or $5.35. Quite a massive move there. Let's see. I mean, we'll have to see. I do have an alert here at $65 just to see if we get back to those highs of $65.73, which were hit on August 5th. But I suspect ultimately this will be retracing to around that red line. Let's see if I have that lined up. Approximately the same level that we see with the UVIX, and that is at let's see, 54.60 for the UVIX. That is at 28.32 in the VIX. And then we do have, let's see, this alert here at 20. And that is corresponding with, basically when the price gets above there, that is when we might be seeing some crazy moves like this. And that's exactly what we saw, but I did not expect it to be so explosive. And so with this going on and kind of, just kind of mirroring these green and red boxes, I had started to short the VIX, kind of a bad move at this point. So I'm just kind of sitting on the sidelines at this point. And that, is with the SVIX, which is the 1X short VIX futures ETF. So it's kind of like the UVIX, except it's not short and it's not leveraged 2X. This is just 1X. And this did close yesterday at $10.91, being down 17.5% on the day and continuing down by about 4% in the pre-market. It did hit a low on the day yesterday of a price of $10, as you can see there. A wick low, I believe, right before the close. And we can see that they're just within the last 20 to 30 minutes of the close, hit a low of 10, bounced a little bit into the after hours, pulled back some, gapped up into pre-market, fading back some more, but still $10 is the low for the cycle now. So we'll see if that holds. I have to say that I was, actually I'll have to switch back to the 10-minute time frame for this, but I was buying yesterday because if I do flip back over to the 10-minute time frame, I kind of, viewed this as, if I just do a Fibonacci retracement from the low from Monday up to that high of 14, I had placed some limit buy orders at 12.55, 12.21, and at 11.73, just corresponding with retracement, hoping that we would hold. I also had a limit buy at the low here, 11.11, and then also at $11 a share. Not dip buying anymore. I do have this alert at $10 there, which did go off yesterday. I was at work, so I wasn't paying attention to it. But I am not planning on dip buying really until we get to 8.18, or maybe I'd nibble a little bit if we start to get below 10, but really 8.18, that is going to be the 1618 from this Fibonacci extension here. We have gone past the 100%, which was at 14. We did put in a bearish engulfing candle yesterday that completely engulfed the trading from Monday. So that does make me think that this is probably going to be going lower. Although, just like the UVIX, we do see the volume starting to diminish. So that could be suggesting that a bottom is near. But again, at 8.18, because I don't really want to be just buying it as it consolidates to form a bear flag and then goes lower. I want to be, buying a pierce, a dip, and then getting that rebound. And so the rebound that I could see at this point, I believe I had this level at 1588 yesterday, but I adjusted that to the low over here. I would have had it as the low, let's see, of 1111. So I'm just going to adjust this to 1111 so we could see where that 50%, I'm getting my numbers confused, that 382 retracement would be, and that's at 1581, but I did not, but we did hit a lower low, so I adjusted that to that low of $10, and so that bounce to the 382 would be at 1513, and so that, in all honesty, is where I have my limit sell at. It's going to be a less than 10% swing for me, but I am just thinking about that as this prior drop, this prior fall off a cliff, and we did retrace to the 382, and so that would be my exit level, and so I have my average below 1513, so I'm not worried about losing money on this other than just losing time being in this trade that's kind of wasting time. Yeah, so I'm just going to be chilling on this one. Maybe I don't have any cash on the side right now. Maybe I'll add a little bit more and just place a limit buy at maybe 820 or 825, maybe 818. I don't really know, somewhere around there to take advantage of that dip and then to exit on whatever that bounce might be. And, I was thinking that this downtrend might be acting as support. It does go back to the lows from October 23rd of 2023 and then the low of August 5th of last year. And so that unfortunately doesn't look like it's going to be acting as support. It looks like it might actually be acting as some, resistance. So I'm going to color that red so we can just keep that in mind. And also one thing that, I should have thought about this before opening this trade is, number one, hadn't gotten out of the red box, so might be going lower. And also I had only drawn 2 boxes here. And prior to it, there was just this massive bleed. So maybe we could have been seeing that again, and that is what we have seen. But I am just, of course, going to be updating this low to be 10. So we have that there, lock that into place. And actually, I'm just going to make sure that does correspond with the high there. Yes, so that is good. And so we'll see, do we start to form a bottom today? I suspect not, as it is, pretty close to 10 in the pre-market. I suspect this will probably be getting into the 9s during the day, but we'll have to see. I'm not trying to panic. I'm not trying to buy the dip aggressively. I am just trying to chill and accept that, I should have just gone in on the UVIX while we were still in the green box, but I kind of got ahead of myself. Learning opportunity, and so, that's what this channel is all about, learning from mistakes and moving forward. And with the topic of moving forward, let's move on to the SPY, the SPY, which is the S&P 500 tracking ETF, which closed yesterday at a price of $496.48, being down 1.57% on the day and continuing down nearly 2% in the pre-market, trading around $487 currently, which is still above this 1618 extension, kind of mirroring what I was talking about with the not the UVIX, with the SVIX. So I might actually color this yellow just so we have kind of a side-by-side comparison there with the SVIX Fibonacci extension there and the UVIX. And sorry, the SPY, I'm tired. The SPY extension there. So just seeing those yellow lines and then mirroring those with the SVIX. So basically the same there. And so anyways, we did bounce though from this green line here at 487.65, which was the low from, I believe, April 19th, remembering my dates, as this over here was the low from August 5th. And so we are at this pivot low there. And where could that be heading lower? I think really just 474 right around there, that 1618. Otherwise, if we do break below that, we do have, this consolidation is right around 470. We do have this top over here around 450. So could definitely be heading lower. So we'll have to keep our eyes on that. But we do have, the volume starting to diminish, just like with the SVIX, just like with the UVIX. And so that could be suggesting that these downside moves are not going to be sustained. And also, something very, a little bit different than what we're seeing with the VIX is that this is not a bearish and engulfing candle. This is just quite a reversal, though. But we did close above 187, although we are currently trading below it in the pre-market. If I do flip over to that 10-minute time frame, we can see the drawdown yesterday during market hours, just a constant bleed, bounce into the after hours, bounce from that green line into the pre-market, and that is where we are currently trading at, right around 487, a little bit lower, as we did hit a low during pre-market trading of 485.26. I suspect we could be getting into the 470s once the market opens, so we'll have to keep our eyes peeled for that. But then if we do flip over to the SPX, which is the S&P 500 index, closed yesterday at a price of $4,982.77, being down 1.57% on the day. Again, like the SPY, not a bearish engulfing candle, but a pretty big reversal. And then closing above this green horizontal line that I have drawn at $4,953.56, which corresponds with that low from April 19th. The low over here being from August 5th. And we do have this prior all-time high that was at a price of $4,818.62, and that high was hit on January 4th of 2022, before pulling back quite massively. And that is basically where we bounced from on Monday, hitting a low on Monday, $4,835.04, but we do have that 1618 extension in yellow here at a price of $4,746.93. I suspect we could be testing that during market hours today, but I don't think we'd go much lower than that, considering that, no bearish engulfing candle here and volume starting to diminish. I think that we could be getting a bounce. But it could also be going lower. No idea how low these things can go. So do be prepared for that. Do brace for it. And speaking of things going lower, let's flip over to Bitcoin here. Currently trading around $76,000. And does look like we have broken below this confluence of levels. Did get the close of the 8th below there. It looks like it closed. Depends on the exchange you look at and the time window that you're looking at for each day. I don't believe they're correct here in Webull, but the close for yesterday looks like it was around 75,000. Currently trading, like I said, around 76, below that yellow downtrend, which is based on the prior all-time high hit on December 17th, and then the pivot lower high here hit on January 6th. We can see that was kind of, this nice downtrend that flipped into approximate support. I probably should stress approximate support, and maybe I actually want to adjust that because I think that, or maybe not adjust it, but maybe I just want to add a different trend line here, maybe going from this low that was hit on November 25th, and then maybe intersecting with the close over here. Yeah, and actually maybe I want to do this from closes. So let's see, got this white line here. Going to do that with the close from November 26th. And then over here, the close from this date, February 27th. And I am going to make that thicker, and I am going to make that green. And I'll lock that into place. And so, yeah, I mean, we are currently holding above that. We did close effectively right at that level yesterday, but we haven't really seen any closes below that level. So, we'll have to see. Kind of got a confluence of levels here, and these two downtrends intersecting around 74,000, which was the prior all-time highs over here, hit in, about a year ago on Pi Day, on Pi Day. It looks like 2024 hit a high of around $74,000. I did have my dip buy order filled a couple days ago at 75,000. I do have a dip buy placed at 72,000, which is corresponding with the 618 Fibonacci retracement from here, and I might actually delete that 50% since we have broken below it, not really a level to be paying attention to anymore. And I might remove this bullish divergence because we have seen a retrace to below those levels. But as I do delete those lines, what can we see here? And I might actually bring them back, and I might just adjust them, because we still see lower lows in the price of Bitcoin, and we see higher lows in the RSI. And so that is a bullish divergence, which could be suggesting a bounce. And I did, actually, I don't know if I reposted it. Let's just flip over here. Unity Software did win, so that is a good one, but I will, I'm just going to pull up the notifications. I'm sure that Gareth Soloway's posted some stuff, but I wanted to see something from Il Capo of Crypto, because he posted this from yesterday, and that is basically that he could see a bounce up to the $92,000 to $98,000 window, because everybody's getting so bearish now. This would sweep out the over-leveraged bears, liquidate them, and then once we get up into this window, everybody goes long, gets too much leverage, and then we flush down to the 60 to 65,000 region that he has highlighted here. And that's based on, it looks like, the November of 2021 all-time high. And then here, 65 is right around the April 2021 all-time high. So the two highs from the prior cycle, that would be acting as support, flush below those. So I would be really excited for dip buying opportunities down there. I do also have a just $10 dip buy limit order placed at 69,420. Just having fun with that number, that being in this kind of range that I had highlighted. That's kind of similar to what Il Capo has highlighted here, but he actually brings it down to around 60,000, which would be, let's see, let's just add another alert there to 60,000. Create an alert there at, let's see, 6123,000, and just doing that below. And let's see, I got some alerts there to the upside as well, but not really thinking too much about them. 86,000, that's one that I talked about. 92 would be getting back into that window that Il Capo was talking about. But yeah, I mean, I am basically just doing more aggressive daily dip buys with Bitcoin. Just thinking about this as kind of my savings account for the year. I think that it will be higher at the end of the year, above, 100,000. And so that's a better percentage increase than I get with my savings account. So that's kind of what I'm thinking about with it. But maybe I'm wrong with that. Maybe that's a really bad decision. And I'm also, as of right now, doing the exact same thing with Ethereum, or effectively the same thing. This has pulled back to a low of sub 1,400. I had talked about 1,400, did place this alert here at 1,500, and I might actually adjust that to, let's see, 1,400, or maybe above. I got that at above. I don't know why I had that at above. I wanted that to be a below. And so let's have another one below at 1,300, just to see if this does start to break lower. Maybe we get some wicks down to there, like we saw a wick below 1,400. But I do think that we are potentially respecting this green uptrend. And let's flip over to the weekly actually to look at that. And there was something I was noticing when I was at work yesterday, corresponding with this, that I kind of wanted to look at, think about, and that was actually the highs from over here. These were, we want to be looking at confluences of levels. So this is pretty cool. We do have a high that was hit here. It looks like in January of 2018. that high. And this was actually basically my introduction to crypto. I started buying, I think, around the run up here, Ethereum and Bitcoin and some other alts on Coinbase, and also via Binance, I believe. And that high that we hit with Ethereum was I'm just going to read it, $1,424.30. And we do have, let's see, I'm going to make that a green line, a thick green line. That would be suggesting that there's some potential support corresponding with that prior all-time high. And I actually might make that a yellow line because I do see this secondary high down here. This was at $838. And so I'm just going to make that thick and make that, actually, maybe I want to do these a little bit different. Maybe I'll make that purple. Just being like, oh my gosh, that's a real dip buy opportunity. And I'm going to make this green because that would be corresponding with, basically where we're currently at. So we got this confluence of green levels suggesting that this is the buy zone. I'm getting more aggressive with my buys. Really excited about it. I think that, Ethereum definitely has 2x potential from here. And if we do look at this, considering, where the highs are, let's see, by the end of the year, where is this going to be by, let's see, June, January. So by the end of the year, this is on the weekly, so I don't necessarily want that. I want this on the daily. And so what's going on here? Why is this? I got that red line up there. I guess I got to do it on the weekly to view it. So let's just drag this over here, 26. Where is that? Okay, so December 30th, 2025, that is going to be around 8,000. And so what I am going to do, I'm going to create an alert around 8,000. I'm sure you guys think I'm crazy for putting that up there, but that really just corresponds with, the intersection of this red line with basically the end of the year. So that's not even the end of the year. It's kind of tough to, actually, what I need to do is draw a vertical line. And actually the vertical line is something that I need to be drawing on here for my own risk management. And that is, so by the end of the year, this is the 6th of January. I want 1 week prior, which is going to be December 30th. And so I want to make that a red line. And that would be corresponding with an intersection here. Dang it, this thing's in the way. Can't win. That's around 8,500. So, with spreads, whatever, may not get exactly to that level, but 8,000, I think that's a pretty nice move by the end of the year. Corresponds with that trend line here. And, 4-year cycle, whatnot, everybody trashing Ethereum, saying it's a stable coin because, it's back to the levels that it was over at here in 2022. And, but I just think that there's a lot of potential with it. So, that's, let's see, from current price, that's a, 400, almost 500% move to the upside. And even just getting back to those prior all-time highs, that's over a 200% move, getting back to the highs from earlier this year. Was that this year? End of last year, that's around, 175% move to the upside. So, yeah, I mean, I like an ETH down here while everybody's trashing it. So, but yeah, let's switch over to ticker symbol URA. This is the Global X Uranium ETF, which closed yesterday at a price of $20.26, being down 1.22% on the day. And in the pre-market, it's down about 1.76%, below $20 a share. And actually, I have to say, one of the things that I was a little bit disappointed about with Trump speaking yesterday about coal is, personally, I think coal is antiquated. I think it's an energy resource of the past. I think that I think that uranium is an energy resource of the future. It was ahead of the time. 1986, I believe that was when Chernobyl happened. Was it 4 Mile Island or 3 Mile Island? I forget, 5 Mile Island, a Number Mile Island. All of these disasters. That was in the world of analog technology. Now we're in the era of digital technology. Yeah, because like coal is an energy resource of the analog era. And and then we're moving into the digital era. Now we're in the AI era. And with all that technology, we can be, just making nuclear a lot safer. I do think that it's really the energy of the future, and we need to be securing up the energy grid. And part of the advancements that we make with technology is that, the energy demands increase. And I feel like that there's a very counter perspective on energy, which is, oh, nuclear's bad, coal's bad, we can't be burning more, creating more potential issues with these fossil fuels or nuclear waste, things like that, because, we need to be going green everything. I think we need to be going green a lot of stuff, but the reality is that as we scale up, our energy demands are going to be increasing, and that argument, I think you've really just got to, if you make an argument, you've got to extrapolate it to be a larger scale or more extreme, and walk it back to be more primitive. And if we do that, the people saying, renewable energy, everything, those are the same people that are firebombing Teslas. And those are the same people that do not complain about getting their, products, whether it's bananas, produce from another country, clothing from another country, that's all shipped to us via, the burning of fossil fuels. And so, if we really want to walk back all of these energy leaps that we have been making, and the luxuries or the conveniences that the utilization of these energy resources brings to us, then we really need to walk it back all the way and just stop driving, buy only local, farm all of our produce ourselves, grow it in the gardens. I don't know about you guys. I have a garden. I'm excited about it this year. And but yeah, so I just think that's ridiculous. I think that I would have been more excited if Trump was talking about, and I didn't listen to his whole speech, but it was all about beautiful, clean coal. And, I think it's good to be bringing the industry back, and I think it's good to be brutally honest with ourselves. And we are addicted to cheap energy. And and I think that renewable energy is just not, I don't know if you guys have experienced temperature swings and stuff lately, or if that's become more regular. That's climate change. It's not the end of the world. It's, it was 80 degrees last week, and now it's 50 degrees this week, or 40 degrees, or Fahrenheit is what I'm saying. So sorry if you're thinking in Celsius. But anyways, uranium, I think that this is a better pathway forward for the U.S. For, I think building up blue-collar jobs, running the plants, like Homer Simpson, stuff like that. Not to say that blue-collar people are as stupid as Homer Simpson, but nuclear, I think, builds up a wide array of jobs for those working in the factories, and also engineers, and the factories, the nuclear plants, whereas coal, I feel like, is more antiquated. And so there's just going to be less engineering, less design, infrastructure. And so I think that nuclear is really just building up, a wide array of jobs, to the highest of levels to not necessarily the lowest of levels. So I think that nuclear is just a better option than coal. But I think coal is, part of our future, unfortunately. But we are addicted to energy. But yeah, so anyways, I've just been rambling about this. I do have the 100% extension here from this. That is around 1886. We did hit a low on Monday of 1950, whereas the low from Tuesday was 1998. So we'll see if we do get a bounce. We are putting in lower lows into the ETF price, also lower lows in the RSI. But like the other ones, we do see diminished volume here. So maybe the bottom's near. Maybe 1886 is going to be that bottom. But anyways, I'm going to flip back over to see this poll. And so Unity Software didn't win today. So I will go over that. And I'm going to try to make time to go over. Actually, I'm probably going to dive into the weeds with Unity. So I will go over Hood first because that did technically win yesterday along with NVIDIA, so I should make time for this. And yeah, and so I will check the comments after I go over Hood and Unity, and in all honesty, there may not be time for it, check in the chat. I just want to be, having these videos come out because I got to be kind of productive at home today before going to work this afternoon. But yeah, I'm just going to record this like I'm recording a video, and yeah, so... yeah, I'll try to be quick. I got about 15 minutes before the hour ends, and yeah, so hopefully I'll have 5 minutes towards the end to go over some requests, but I might not. Sorry about that. But anyways, I'm going to start this video. Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of Robinhood, ticker symbol HOOD, which closed yesterday on Tuesday, April 8th at a price of $34.17, being down 3.5%, and it looks like it's currently trading in the pre-market down another 3% at around $33 a share. And so here looking at the daily, we will look at the pre-market in just a second, but here looking at the daily, I just wanted to do, let's see, some retracements, some levels that I think might be standing out as support if we do continue lower, or potentially to be suggesting that the bottom is in. And so looking at this, I could go back in time all the way to this low that was hit in June of 2022. That looks like it was at a price of $6.84, and I can't unfortunately get all of this in the window, but what I can do is hide that to get this to be, full picture here with that low over here from June 2022 to the recent high that we hit in February of $66.91. Just want to be drawing a Fibonacci retracement from those extremes. So 681 up to that high of 66.91. And we can see pretty miraculously, I did not have this planned out. I'm recording this live. 618 just happened to be there on my Fibonacci retracement, and that looks like where we bounced from. Pretty remarkable. That is at a price of $29.77, but just going to make sure that the levels are exact over here. So those are looking good. And yeah, so we did hit a low on Monday, which was Black Monday. And Black Monday, we haven't really gone lower than where we opened at. And the low was actually at a price of $29.66, just, let's see, 11 cents lower than that 618. So a very nice, a limit buy at that level would have been a really nice dip buy, even with the pullback that we're seeing in the pre-market, which is price around $33. Dip buying that level would have been a more than 10% bounce to where we're currently at. So that's a pretty nice level. I like that. I'm impressed by that. I'm very surprised that it lined up there. But we can also add, another level to this retracement that might suggest we could be finding some support a little bit lower, and that would be the 786. That is at a price of $19.67. And so something that I like a little bit more about this level than the level up here around 30, I guess, 30. Whole divisible by $10 number there. But we also have that down here around 20. And we also have, it looks like, some support, or what was prior resistance might be, flipping to support if we do get back to, let's see, the highs over here that we hit on March 27th of 2024, about a year ago, $20.55. That could be flipping to support, as that approximate level was support over here. That could be acting as support again, so do keep that in mind. We also have the high over here from March of 2022. That was at a price of $16.49, so potentially could be getting lower than 1967. But I don't really see too much over here. We do have this little blip actually right in here. This was a range from, let's see, how do I want to draw this? Let's see, I will just draw a little rectangle here based on that low and that high. And that is, kind of to suggest that that could be acting as some support. And so, yeah, I am just going to adjust this to actually, before I adjust that, and you can tell I'm doing this live. So let's, fast forward to the future. And so I'm just going to drag this forward so we kind of have that, as a window for the months ahead. But then I want to go back in time, excuse all of this, to just fit this to, and basically the low that was hit over here was 33. That's not right. The low over here was 2058. Okay, it's a rectangle. I was trying to, I'm an idiot. So that's the low of 2058, and then the high here, 2374. So 2374, 2058. And so that is, effectively the range that's there. So that could be acting as some support. So I'm going to make that a green box, suggesting that that could be corresponding with, a very nice, very nice dip buy above, if we do go lower, above that 1967 level. And so the top of that would be, as I had drawn, around 24. So maybe we see a dip to around there. And then I'm just going to see, do we have any other kind of consolidations over here around 29? We do have, this high over here, which was 29.22. But actually, maybe what would be nice is if I do it from the close on November 22nd of 2021, because the reason why I'm doing the close there, we have the overlap with that candle, and then we also have the overlap, this consolidation here, rather than just going from the high at November 26th, 2021, which was $29.22. I think that we wick below that. And then getting into that consolidation, that would be around $28. So that they're marked at $27.84, which was that close from November 22nd. And so, yeah, I'm going to make that a yellow level because maybe we find support there, but maybe we do break below into this range that I had talked about. And so, we have not gotten to that yellow level yet. That would be around 28. So maybe we see that. And, all these levels that I've drawn up here, let's also consider the moving averages. It looks like the 200-day is potentially acting as support. That is currently at $33.14. That is the blue line here, if you didn't notice, the 200-day moving average there. So maybe that acts as support. But I feel like, probably what would cause the most amount of pain is people to see, hey, we are bouncing from that 200-day moving average. And so what I could see is maybe a bounce, but maybe get rejected by that 21-day moving average, which is currently around $41. It's the pink line there. Or maybe the 50-day moving average, which is currently around $47. That is the yellow line there. And so maybe we get rejected from one of those levels and then we pull back to this box here. And I think that would be like the really deep value, the real discount zone territory. And so what I could see to cause the most amount of pain would be a bounce up to one of those levels and then a break lower and then maybe a bounce to start to see this making higher highs or maybe break this downtrend that we're kind of currently trading in right now. So yeah, I think that we need to see bulls get back on board and then to see another further correction getting back down to around 20, maybe 23.75. So I might actually just put an alert there at $24. And so that will be a below just to kind of get my attention. And then I will also put another alert at below 20. And I'm going to delete these prior alerts because I don't think we're going down to 10. But yeah, so those are a couple levels that I will be keeping my eyes on. I don't currently have a position in Hood. It's one that I'd like to establish a position in, but I don't necessarily want to be spreading it myself too thin. So I'm just going to be keeping my eyes on it. But with that being said, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot for watching. And I've got about 5 minutes left, so I am probably going to try and get over to the Unity software ticker. And actually, I might, rather than pulling it up there, because that will be my list of stocks, pre-market prep, Unity software over here. And so I am just going to, let's see, minimize that. And I will talk about this. So yeah, that's quite disappointing seeing what this chart looks like. But yep, I'll go over it real quick and then I'll check the chat once I'm done. I'm sorry I haven't been able to get to it just yet. But yeah. All right, so let's see, I'm going to remove my drawings. Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of Unity software, ticker symbol U. And so here I am recording this during the pre-market on Wednesday, April 9th, after Unity closed on the 8th at a price of $16.75, being down $2.09, being down 2.9% on the day, being down 50%. Being down 50 cents on the day, and then continuing lower into the pre-market, trading around $16.50, a further 1.6% downside move there. And so, yeah, I wanted to follow up on this ticker because it was the winner for the poll for today. So thank you for participating in that. And so I have to say this did pull down to levels I was not necessarily expecting. But if we do look at some of the drawings that I have up there, it's going to be a little cluttered. We may be at some technical support, so wanted to go over that. And I also wanted to note that I did have this alert here at, I guess, below 1612. I was thinking it was going to be at 1538 because I actually did dip buy just one share, at 1538. That was based on a level that I have drawn up. I believe it was. So let's look over at those drawings. It's going to be a little bit cluttered though, but I did just want to point out that 1538 level. That was, let's see, the lows from over here. That was the low hit on June 20th of 2024. And so, yeah, I nibbled a little bit there. Very happy about that. Would have liked to be more aggressive, but maybe we do retest it. But as you can see, a lot of levels to the upside. There's a lot of clutter here. We are below a lot of those levels. And so, I'm going to clean up the chart and just walk you through my thought process here with this. And so, I can delete some of these retracements because they're not necessarily that useful, but I do want to kind of go over some of the levels that I think were some nice predictors. And so here we do have kind of like, the double top here. That was a nice level for getting this pullback to the 786 around 20 before the stock price bounced from that level, going up over 40% there. So that was a very nice move, but we don't really need to be keeping an eye on that now because that move's already in the past. We also do have this Fibonacci retracement here, which, is also kind of a thing of the past, but it did serve as a very nice predictor for the bottom over here, and we have retraced to a level coinciding with all of those levels over there. And that is this purple downtrend, which was the neckline for this inverse head and shoulders pattern, which did get us a nice move up to here, around $23 a share. But of course, now we are trading below that. And let's see, I might want to make these lines less thick and add the 786 just to see where that's at. And yeah, we did test that level. So maybe that's a dip buy level. So I'm just going to make that retracement green. But I might actually just want to delete the whole thing because that's totally a thing of the past. And we do have a confluence of levels here, that neckline, that purple line there, and also this uptrending white line. We've pulled back to that purple that purple neckline there. We've also pulled back to 1538 when we hit a low on Monday on the 7th of 1533. So that was a beautiful dip buy level. I had talked about this either during a stream or the last Unity software video that I put out. So congrats if you took advantage of that. I'm happy that I did. One thing that we can see, zooming in on the chart here, is that volume is pulling back. So it looks like volume was green here and going up when the stock price bounced, green going up to get a little bit of a retracement, but it's not a bearish engulfing candle. It's not a massive downside move. We do have this purple, that is the downtrend, I believe, from that neckline. So not at a specific level, but we did close above it. So I think that looks good. Volume coming down. That does suggest that we could be seeing a bottom there. So I'm liking it, even though we've broken below this uptrend, even though kind of the very bullish sentiment that I had did not play out. We did not get up to 33 over here. So I'm just going to delete that Fibonacci extension. We did fill this gap here, so I can delete that. And yeah, I think that this is probably going to be going higher. And we can also take a look at, I suspect this is going to be below the 786, but I could do a Fibonacci retracement from this low of 1390 going up to the high of 3088. Let's just see, make sure that's 1390, 3088. Where is that 786? That's at 1753. And, I am going to want to remove those 618s, that golden pocket there, and I'm going to want to make that level yellow because it's kind of a cautionary dip buy level, and I should make this yellow line here probably green until proven otherwise. That was a very nice dip buy level down there in my view, but maybe we could be pulling back to $14 or $13.90. So I'm actually going to adjust this alert to be below 14, and I might, because I'm an idiot, make it 14.20. Gotta have fun with the 420s there, and really just thinking, if we break below 15.38, don't want to be chasing a falling knife, but if we do get to 14.20, that's a higher low, and maybe that would be suggesting that it's a dip buying opportunity there. And I should probably adjust this white line to be red. I think that would be acting as resistance if we do get up there, and I can delete this doodle because actually, no, we still could have that doodle. Still, this could be inverse left shoulder here, head here, and we just need to get up to around 45 to have that play out. and that would suggest further downside later on, but we'd have to be getting up there. So yeah, I mean, by the end of, or by middle of the year, maybe by the end of the year over here, I could see this getting up to around 45. And, but yeah, let's see. Moving averages. Maybe we want to look at those. Those are all above us. Those would suggest some resistance around the range of $20 to $22. So that would be corresponding with getting up to this, let's see, uptrend, that red line there. But let's just do a Fibonacci retracement from the high here of 30.88, I believe, and then down to the low that we've currently hit of 15.33. Going to make sure that those are correct levels. And I actually don't want this to be so high at the 786, 27.55. I want to put that at, let's see, the 50% retracement, 23.10. That would be corresponding with a potential rejection from that red uptrend. But let's also put up the 382. That would be at 21.27, and that would also be corresponding with those moving averages right around there. So those are some levels that I think we might be getting rejected from, but maybe we go past them. So I'm just going to make those orange levels to suggest we're kind of getting into the rejection territory. And and with that being said, let's see, I did want to look over at some options data because the Bronx Viking was posting about this, as well as Orlando. And what we can see, though, I did want to point this out. We do have, let's see, higher lows in the stock price, and the RSI has effectively been putting in the same lows, and so that's a weak bullish divergence. Well, actually, let's see. Weak bullish divergence, whether that's this going to, let's see, going from here, that's lower lows in the stock price, whereas the RSI is flat lows. That's a weak bullish divergence. Whereas here, if we look at the higher lows, with the RSI being more or less flat lows, that is and I'm just going to move this in front of Ed's head there, sorry about that. That is then going to be a weak hidden bullish divergence when putting in the higher lows, and this being flat. Higher lows and lower lows, that would be hidden bullish divergence. So yeah, there are some divergences there. Maybe we're seeing a bounce from around 15.38, but maybe this gets into the 14s. And the thing I wanted to talk about, which the Bronx Viking was posting it, so maybe I'm actually just going to go over to my page and let's just see. I posted this. I think it was probably going to be on a reply. Let's see. This just going to be, oh, yep, so here. Bronx Viking posted this, and then so I misspelled Brachiosaur. I forgot a U in there, but I wanted to get the U ticker there. But so I kind of posted this, that, wondering if he's looking at these spikes that we saw in Unity Software yesterday, the net call premium going up by over, about 2.5 million. So kind of looks like a Brachiosaurus there, with the, in yellow, the stock price being kind of the legs, and then the neck being the net call premium going up. But let's look over at the Unity Software chart for the entire day. And so that did say stay sustained. It closed the day, the net call premium up by about $2.43 million in call premium, whereas the net put premium ended the day down. And so this, good luck to us, 69% being in favor of the bulls, our favorite number there. So that seems like a really good omen in my view. But let's look at the spike that we saw here. This was around 1224 yesterday on the 8th, 1224 in the afternoon Eastern time. So let's look at what that corresponded with. I believe it's going to be the $25 strike call for June. But let's look over here at the flow feed. I am going to adjust this to be Unity Software, and I am going to adjust the date to be April 8th. So that was yesterday, and let's just I'll just leave it for the entire day. And let's see, this was a I'm going all over the place. This was a spike of around net call premium going from 860 to around 2.4 million. So let's just look over here and I will filter this minimum premium to around, let's see, $1 million. Let's start big. And so that's 100,000. Let's do a million. There was one, 1225. So this, that's pretty exciting. I didn't expect there to be $1 million. And so actually, so we can see all the numbers are 999, 999. So that's, basically less than $1 million. But yeah, so this was a call that we saw. Maybe I want to filter that so we have a little bit more data. So let's just do 500,000. As a minimum. Still that low there. Maybe I'll just change this to a 1 so you can see 100,000. We do see some more calls, puts. But really, the one that I'm interested in, and I stuttered there a little bit. It was kind of weird. It's kind of funny the noises you can make with a mic in front of you. It's interesting to listen to myself talk sometimes. I'm sure that was a weird sound for you. Anyways, this is actually, that was not the one that I was thinking it would be. This is the $30 call. For June expiration, this is the $25 call that, let's see, that expires in September. Monthly contracts in September. This is a 10,000. It looks like this was $1.6 million. This is bullish, being on that ask side. So let's just look at that contract. And so the open interest prior to yesterday's trading was, if you can see it, it's kind of in front of Ed, so I'm going to have him step aside. The open interest yesterday at the start of trading was less than 5,000. Then we saw a volume of 11,713, open interest going up to 15,096 at the start of trading today, which has not started as we are still in the pre-market as I record this. Increase of over 10,000. And so that's bullish. That's why we got this alert here. This volume has exceeded open interest. And so this is looking pretty exciting. And so this is for $25 strike in September. I don't know who this is buying that, but that does seem bullish. And then let's also look up a contract. I wanted to look up, let's see, $25 call for June here. This is the $30 call for June. So let's look at that. No alert yesterday, but we did see a pretty massive increase in open interest, going from about 12,000 open interest yesterday to about an increase of 10,000. And so that's bullish. $30 strike June. So that's, we did get an alert here actually. Volume has exceeded open interest. So this buy, this whale buy, the green candle that we see here, that was a pretty big spike, but it wasn't bigger than, the volume wasn't bigger than open interest, because open interest start of yesterday was about 12,000. And this candle was a spike of 10,000. And so that was not greater than open interest. We needed to get these smaller candles later in the day to see that spike. And so that does look good. If we do look back, let's see the past 7 days, we can see that was the biggest candle for that one. If we do look past the past, let's see, 30 days, this is starting to look like this is turning around, maybe starting to get into some bullish territory. The past 90 days, this is standing out, so I'm feeling pretty excited about that. But then let's look at some other contracts. I'm just going to adjust this to be, let's see, 10,000. And so maybe we could see, I want to see the $25 call, but that expires in, let's see, in June. And so I'm just going to filter this to only be calls. And then so we can see $25 calls, 30 there. 25 call, that's September again. This is the $25 call of June. And so I've seen, I believe, Orlando and the Bronx Viking talking about this one. So I just kind of wanted to look at it. Nothing that really stands out from yesterday, but from Friday it looks like. So if I just extend this back 2 days, we see this pretty big green candle here. And so from, let's see, open on, this is from open on Thursday, so the 7th of, Monday. This is Monday. So from open on Monday, we saw, it was Monday the 7th, we had an open interest of less than 10,000, but then volume on Monday was 12,000. And so that's what we're seeing here. This was Monday the 7th. We saw this candle volume being over 10,000, 10,215, and that corresponding with an increase of open interest into yesterday, into Tuesday, of an increase of 11,328 contracts, open interest going up 21,000. And now, as we open in about 15 minutes, as I'm recording this live during pre-market, open interest is around 20,451. And so that is pretty big increase. So this is bullish. This is $25 strike, June, 72 days to expiration. And then we have that other contract that I was looking at, which is the $25 strike. This is for September, 163 days to expiration. So looking bullish there. And then we also have this $30 strike for June. And we did see some more bullish activity. So things are looking pretty bullish with Unity Software. We did bounce to this level that I had talked about. I had a dip buy at that level, 1538, piercing it at 1533. So I think this is looking really good. And I must say, I think that we're going to be testing these orange levels here, 2127, 2310, maybe getting back to these highs of 3088 by September. Who knows? But yeah, I think that the chart here is looking really good, despite things being a little shaky in the markets with the tariff wars, whatnot. But looking at the options data, I think things are starting to look bullish. Technical levels on the chart looking good. We are getting gifts with prices being back around here that we haven't seen since really like the lows of November of last year. So I think what we're getting right now is a gift, a dip buying opportunity. And so while I'm not being too aggressive with it, I am taking advantage of it. And if you guys want to, I hope you are too. But as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this and pre-market preps. Thanks a lot for watching. Take care and have a great day trading. Cheers, you guys. And I am actually going to be signing off with that. I will open up the chat, though, just to see what you guys were saying. Sorry, I got all consumed by that. And so Sandy's saying good morning to everyone. Good morning to you. I'm sorry if you're not still here. And then Nikki's saying sell. Anyone saying otherwise is trying to protect themselves at your expense. That could be true. I'm just going over what's in the charts, but I think that somebody just yelling and screaming sell with no context, that might not be the best thing. I think you got to trade your plan and tune out the noise. And then Caleb Walker saying brand new to stock market, current, don't own any stocks. In my case, wouldn't this be a good time to buy? Caleb, I would say that this is probably a good time to average in. What I think I found for myself, and I get made fun of for doing this, I find that buying, I'm going to buy at this level, I'm going to put all of my money in. That's a really bad way to trade. I find that what the best way to trade is the dollar cost average. It's very boring, but you want to have some money on the side for if things do go lower. I think that's the way to do it, but you got to do what works for you. Everybody's different because it's all about psychology. It's all about managing your fear, your greed, your panic. And so you got to manage that. So I think that now is kind of a time to take it very easy, take it very slow. Because, if you put, let's say, $1,000 on something, depending on what your budget is, it can be very hard to add thousands more to that. But if you do $10, it can be very easy to add $10 more if it goes lower. And then Nikki saying, don't buy, bet on shorting. I don't know what YHID stands for. But this, and Nikki saying this is not legal financial advice. None of this is. I think that, don't listen to people on the internet. Consider their opinions. and then evaluate yourself and do it based on that. But with that being said, I'm going to try to release those 2 clips as videos before the market opens, which is going to be tough. But I will be doing that. And yeah, with that being said, if you did enjoy this video, if you did enjoy the stream, make sure you like the video, share your thoughts in the comments down below as always, also in the chat. I try to make time to check that, but I unfortunately didn't have much time today. And make sure you subscribe for more videos and pre-market preps like this. Thanks a lot for watching, and have a